All right, traders. So yep, we are onto my screen now. So this is exactly how things stand. We got the S&P 500 first on my list. So remember, guys, I said to you guys that my prime target for the S&P 500 was actually 6,700 basis points. Yep. So we're actually en route. So we actually did actually pull back into so we did pull back into this demand level at 6,200 basis point, like so this was we actually highlighted for you guys the last time, and this was exactly where the market pulled back into, and then now bolted through the roof from there. So I didn't exactly pay attention to this market because I was actually busy doing a lot of things. So I actually missed this trade. But if you actually had the opportunity, so it was very simple. It was a very simple thing. So this was like a rally, and then we kind of like bottomed out at this point here, creating a very dicey demand level from here. So when the market pulled back in there, I think this was also where a lot of people actually went long. So it was a very seamless trade. It looked like it was a very seamless trade, although I didn't actually catch this trade because I was busy with a lot of things. Like I said in the intro. So this was more or less where to take the profit. As I always say to you guys, yeah, the whenever you're in a buy trade or a sell trade, you must always target the recent high or the recent low for your exit point. You get me? Or your partial exit point. So don't worry, these things will be taught in depth in the mentorship program. Okay, that's why you need to save up your fees so that you don't miss out. At least start 2026 on a very solid note. You get me? So now so yep, it was a very simple. It looked like it was a very simple trade. So maybe a 4 hour engulfing candle somewhere around here. Since this pullback is very linear, and you guys know that we have certain kinds of pullbacks. We have the one that flags, and then we have the one that falls out of the sky. Typically, what you most likely find with the JPY pairs. All right. So in this case here, the market just fell through, and then fell off, and then came right into 6,220 basis points right around this demand, and then we just bolted through from there. So now moving into the coming weeks, what am I actually looking out for? You guys know, man. I like to see now that we have a clear direction. This is a pair that has a clear direction. Um I will not hesitate to actually let you guys know where I'm going and where I stand in the market. You get me? So now for those of you guys who are a bit older, I'm a very young person, so, so I'm sorry for using the language wagwan. You get me? So what I meant was I'll actually be a lot more active on here to show you people what exactly is happening in the market per time per season, especially with the pairs that are actually starting to give us clear direction now. So as things stand here, this is the daily time frame, like so. So now I'm just gonna go ahead and then look out for another possible pullback, place for us to actually buy the S&P 500 from. And as you guys know, the S&P always has a bullish sentiment, and if you ever have this guy giving you any sort of bearish play, you need to know that that's only a pullback. You get me? So these are the levels I'm actually looking at for the moment, because how you actually know how the market is going to pull back in the next couple of trades is to study the past kind of pullbacks. So the way the market pulled back in the past most likely give you a clue on how the market will most likely pull back in the future. So as things stand here, this is exactly how things look. Yep, so we had pretty much from I think this was April or February, March, there about that tariff period. So from there on, when this market actually broke out of this counter trend, like so.
It's 23 hours.
Shut up. So when the market actually broke out of this counter trend, like so, we've actually been printing series of demand level plays. All right, so we barely ever did that break and retest. It was more or less demand level plays all through. So yep, that's exactly what happened. So if you actually look closely, that was exactly what happened here again. Happened here, okay. And even when we actually broke out of this range, like so, if you look left, you can see that most of these pullbacks happen around a demand level. So that's how you actually know how the market will most likely act in the coming weeks. So as things stand, I can actually spot. So this is a swing low to swing high. All right. So and you guys know that the market must also fulfill certain criteria if it is actually intending to move in the upward trajectory. And in this case, it has to give a series of higher highs and higher lows. So scaling down to the 4 hour time frame, this is exactly how things look. Now that I've actually identified a potential pullback point on a daily time frame, what I simply do is come and then adjust these levels properly to match up nicely with my Fibonacci tool. By the way, guys, Fibonacci will be taught in depth, okay, in the mentorship program. So this is it. So this is where I'm actually looking at the S&P to pull back into. I know you're pretty much skeptical and asking, oh, why did I omit all these levels on here and then come all the way down here, guys? You need to understand that have been doing this for a while now, and I can tell you this for free. The markets most likely, you see the way he moved, he actually respected demand levels. So this is more or less going to be a demand level play all through for the S&P 500. You get me? So that's how I actually know how the market will pull back. So enough of this yap. So I can actually see a base point somewhere around here. Let's see what that looks like on a daily time frame. Now, by the way, guys, for those of you guys who are actually wondering how I actually do this, it's a very simple approach. All right, so it's called top down analysis where I actually go from the top all the way to the bottom. Now I'm not actually doing this because I've been on S&P for a while. You remember, guys, we caught S&P cells from here like so. Then we actually wrote this guy all the way up. So for me, I'm actually very focused on my next level target, which is at 6,700 basis points. So all I have to see is a pullback into 6,350 there, about somewhere around here like so. Then give me a beautiful 4 hour engulfing candle. So like I said, the way the market pull back initially, yeah, should give you a clue on how the market most likely pull back. And as you can see here, we just drop out of the sky most times. So do not be surprised to see the S&P just deep from there all the way to 6,300 basis points somewhere around here like so. So once it comes here, so it will be very simple, provided that the market actually pulls back into that 6,300 points like so. So this would be a very decent entry point for us to ride this guy all the way through to the roof. My long-term target remains 6,700 basis points, and I'm still keen on that. You get me, boy. However, you also need to understand that the market will not just blow through in a linear format. You're gonna get waves. You see, we're actually, whether or not this market moved in a wavy or linear pattern, the objective was to get all the way to 6,130 basis point, and we actually did that. You get me? So now it's one thing for you to understand the target, is a different thing entirely for you to understand price action. So price action literally means how the market moves. Okay, so that in that case here, we should actually give you a clue, because I'm actually holding on to see how the market pulls back into 6,300 basis points somewhere around here like so. Then I actually go long. So my stops, so it will look a bit like so, and this is why I like the 4 hour time frame, because it kind of like reduces the noise. I'm not really a big fan of seeing multiple candlesticks as much. And please, in the event that you're not able to say or state what exactly categorically what the market wants to do, I always say to you guys, man, do not be ashamed to go one time frame higher. You see, it's a lot clearer on the daily time frame. So let me see how I can connect to trend line and see if we have something going on here like so. So we have the first touch like so, first touch on here, second touch here. Okay, so let's see what happens. All right, so pretty much still bullish. So that is a trend line I'm actually choosing to work with. So this first touch here, I actually had to draw that properly. So this is first touch, second touch. So far so good. The market seems to be respecting every single thing that points to bullish by giving us series of high highs and high lows and respecting the trend line. All right. So in the next couple of weeks, I should be seeing the S&P dip towards this point like so. So this is the point I actually want to be buying the S&P from. All right. So once I knock a trade entry from here, my take profit to be at 6,700 basis points, and then my stops will be below structure, and then that's that for S&P. And you guys know that whatever thing happens on S&P most likely happens on US 30 and then the Nasdaq. All right, so these are the things that you need to actually watch out for, because to better trade the US 30 and Nasdaq, you need to mirror the S&P 500, because this is like the I was about to say divide the X. Guys, I've been studying for my exams, man. So this is more or less the dollar index of the rest of the currency pairs, if you actually get my vibe. So that's that about that. So crude oil is actually back in a downtrend. I'm not gonna talk too much on crude oil, because I'm actually choosing to allow this guy, find his bearing. You guys were laughing at me when I actually spoke to you guys. I said that crude oil was actually gonna dip to at least $50 a barrel. Now look at what happened. When the market spiked up here, everybody just comment at me in the comments, blah blah blah. Now look at what's actually happening in the market. But don't worry, guys. When the crude oil is ready, gives me a decent, criteria and decent price, and I'll be back here again to let you guys know what's up. All right. So the next pair on my list now will be the pound sterling. So GBPUSD seems to be the only pair right now that is actually giving me a very nice tune. It's dancing to my tune. Okay, so because we actually had a very solid demand level somewhere around these levels, like so. Now remember, I was actually keen on seeing this guy drop all the way down to 1.2700, like so, but that didn't happen. Instead, what the market did was literally come and pull a very smart one on me. So he came on here and then respected the demand level at the daily time frame, like so, which is what I typically love to see. I love to see this kind of price action, but hey, it happens, it happens. So I actually missed this trade. I was actually looking to go short because I thought, I mean, that this head and shoulders pattern was going to hold. You see, this is one of the things you must wait for the market to confirm a chart pattern. The fact that we've broken neckline and we are pulling back doesn't actually validate it unless we do see a bounce off of that neckline. So once I saw the market break above here, I wasn't really interested in shorting this guy anymore. So now as things stand, we've pretty much shifted to the bullish side of things, and as you can see now, we've created a low, we've created another high. So what we need to see moving into the next couple of weeks is a lower high, what's it called, higher low from here rather. So higher low, so that is the market needs to pull back into 1.3400, like so, and then give us a higher low formation so we can actually bolt this guy through the roof. You need to understand that by the time you're able to, if you're able to understand what trend that the market is actually printing, you are very pretty much in line on en routes to making money from the market. But if you don't even have any idea what the trend is, you're just gonna be lost. Okay, so now on the bullish side of things, I favor these guys with upside to the tune of 95% once we see a decent pullback into 1.3400, like so. However, please and please always watch out for its kind of trades, okay? Because what the market is simply doing is just playing around the supply level. That's why the market halted around here. So it doesn't necessarily change the trend. It's just that this is a supply level and it's also around the Fibonacci level as well. So you need to understand that the same way you're buying a pair, all that we have people who are actually shorting that pair. You get me? So you just got to a supply level that has actually reversed price in the past, and the market just simply reacted as I expected it to react. Okay, so now moving into the next week here, what I need to see on the pound sterling is very simple. I need to see us pull back into 1.34. Guys, do not go long on this pair here. Doesn't look like a very beautiful. It looks like a trap, like a liquidity trap. All right. So what I would actually prefer to see is market pull back into 1.344. 1.3000, like so, and then as you can see, I have my alert set because I'm actually busy with my exams. So once the market pulls back in there, TradingView sends me an email, I jump in, I ride this guy all the way through the roof. All right, so my long-term target for the pound sterling will be from not point from 1.3915 all the way to 1.37897. So that's roughly 400 pips. But remember, we have space to the upside, so we have roughly 800 pips to the upside. So we've got three level targets. First level target being the 1.35897, second being the 1.37897, and then the last one being the 1.42384. This is looking like the market wants to reverse totally. So guys, be sure to stay active because I'll be here. We are knocking out lots of trades this quarter, man. Lots of trades this quarter and the next quarter. Before 2026, guys, we need to make serious amount of money, guys. You get me? So, yep. So the next pair now should be the euro dollar. So the euro dollar also has a similar printout. So let me see what's happening on the euro real quick. I guess is it? I think this is the euro. All right, so those are so I'm just here to show you guys the pairs that actually have the best possible setup for us. So again, similar I'll play with the euro USD as you can see, like so. So the market is actually in terms of clearest structure, the pound sterling has it for me. But notwithstanding, the market is actually giving us a series of higher highs and higher lows, like so. So what the market simply did was coming to a demand level around here, like so. Then both out nicely. So as you can see, on its way up, it has actually given you clues as to where we'll most likely pull back into. Because if you study the past kind of pullbacks, you see that this is coming not back into this level at 1.15528. So what I simply need to do is very simple, like so. Allow this. What I simply need to do is very simple. So I allow the market pull back into 1.15400, like so. All this trend line, because this is also starting to line up nicely with the Fibonacci play. You guys know me; I do nothing without my Fibonacci tool, man. So once we see a decent pullback into 1.15400, first level target to be 1.17348, and then last one will be 1.18296. I will see the dollar begin to lose momentum, lose steam, and then begin to chill and lose buying pressure. So what we are actually seeing here is a potential 700 people no rise to the upside for the euro dollar in a nutshell. So that's just that about that. I believe I've covered every relevant pair as it stands now. AUD does not really have the clearest structure for me right now. So I'm not really enticed about that, but this is how things look. So I am not really enticed about the AUD. This is a day bearish engulfing candles. You guys know that this pair has been in the range for the longest time, and that's always my challenge with the AUD. It doesn't always give us the clearest. So let's see USD CHF. Yeah, so USD CHF. Remember guys, we were actually shorting this guy to the downside, as you can see. Like, so actually had a very beautiful year shorting this guy right all the way from here. All right, so as things stand here, we're actually gonna head to come into so that pullback literally made us blow through this level at what 0.80357. So so now we are actually starting to see a lower high from here, a lower high from this level here. So what the market simply did was actually come into supply levels, like so. So now what I simply need to do, since we have a lower high from here, we just see this market break back down below 0.80400. Once we see a beautiful breakback down below here, like so, guys, we're actually knocking. Remember, we have space to the downside, guys. We have enough space on USD CHF. We got over what's it called, over 800 pips. All right, so similar thing to what's happening with the pound sterling. We got space to the downside. You guys know your biggest advantage in the market is pace. You really want to trade into an open space. All right, so a breakback down below 0.8500, like so, will be 0.80400 rather. I beg your pardon. So once I see a clear break, so it's gonna look something like this. So break back down below, pull back into this nicely, then we collapse properly. You get me? So I let the market go, give you that drop, pull back nicely into 0.80400. So when the market is just about to move, this is where you actually want to lock in, and jump on the trade, because this was where the market actually came into, in the recent time. All right. So the first level target for USD CHF will be here, this bottom here, like so. Okay, so that's just that about that. Provided I actually break back down below here, I have no reason shorting this guy to the. I have no reason as to why I will not short this guy to the downside. It looks like a pretty decent trade. All right, all things being equal, we got like potential 150 pips to the downside, as you can see, like so. So that's just that about that, guys. Yep, I guess I've covered all the necessary pairs that actually have potential to actually pay us for the rest of the year. Okay, so these are the pairs we're focusing on at the moment. So we got the pound sterling, we got the euro dollar, we got the USD CHF. Okay, all these pairs. So these are and then the S&P 500. These are the pairs that actually have what it takes to pay us for the rest of the year. You really do not want to mess up your year trading all these dead pairs. All right, so you want to focus on the ones that have enough volatility and liquidity to pay you well. So if you've been losing money from Q1, this is a chance to actually recoup all the money you've wasted in the market. You get me? So that's just that about that. And I believe I've covered every single pair that is necessary to your advantage. And thank you so much, guys. So let's go.